Hello everyone, thank you for tuning into this Your Overseas Home webinar on financial planning and managing your currency transfers when moving to Spain and buying property there. My name is Richard Way, a member of the Your Overseas Home content team, and I'll be hosting this session. It's great to have you all with us, whether you're watching live or our recorded version, which is available through our on-demand webpage on the Your Overseas Home website. So we've got two specialists on the panel for this session, both of whom work in their own ways. Working in their own ways can help to protect your wealth when moving to Spain. First is Remy Hart, a senior wealth manager at international financial services provider Holborn Assets. Hi Remy, you can hear us all right? I know you're down in Spain.
Okay. Thanks for having me.
Brilliant. Great, welcome. Remy's going to talk about financial and tax planning, things that if you get wrong can lead to painful financial penalties when you move to Spain. So he'll be addressing things like structuring your investments, pensions and other assets in the most appropriate and tax efficient ways, your reporting obligations regarding tax and how their time of residency. Lots of valuable nuggets to take away from him today. Then we also have our currency transfer maestro, which is Jack Wiggs. Jack is from Smart Currency Exchange, a leading currency exchange and international payments provider based in London. He's going to talk about exchange rates and the effects they can have on your purchase and your life in Spain, as well as how a little planning with Smart can save you money, make life easier, and bring peace of mind when making cross-border payments. So, hi Jack, how are you? You can hear us all right?
Hi Richard, yeah, good afternoon. Yeah, I can hear you all good.
Fantastic. This session is about 60 minutes long. We're going to start with a presentation from Remy on the financial planning side of things, and then Jack's going to give us a presentation as well. But we also want to hear from you, our audience, and we welcome questions. And let's take advantage of having these two experts available and answering questions live today. So to ask a question, you can use the questions tool, which you should see on your dashboard. Just type your question in there, and then I'll pick them up and I'll field them to the relevant panelist. I'll probably address these towards the end of the session, just to make sure that both of them get a good chance, enough time to do their presentation. So don't worry if I don't answer them immediately. But that's enough for me. Let's hear from the experts. Remy, do you want to kick off with your presentation, please? Over to you.
Of course, thank you, Richard. There we go, a nice picture of Spain to start us off. A little bit about myself then, kindly introduced by Richard there, appreciate that. So I'm based in Spain, as you mentioned, in sunny Spain, may I add. We've had a few weeks of rain there. It's nice for the sun to come back, it's 24 degrees. I've been here around 7 years. I'm a qualified financial advisor, specialising in savings, investments, pensions, retirement planning, and essentially tax planning for expatriate clients. I'm based in Spain and I predominantly focus on clients moving to or living in France and Spain. They're my main areas of specialty. I've got a good understanding of the tax and legal framework in both jurisdictions. And yeah, I work for Holborn Assets. So Holborn Assets, a lot of reasons I work for a company like Holborn Assets. There's certainly a lot of companies in the offshore space for financial advice, but I wanted to work for one of the largest and most reputable companies globally. We're one of the largest wealth management firms in the world, 18 international offices, a few billion under management. I don't know off by heart. I certainly don't look after all that myself, but we've been around an awful long time, and we're such a large company with so many different areas of advice we can give, from savings, investments, property investment, pension planning, the list sort of goes on. We're fully licensed and regulated in every jurisdiction we operate in. It's very important for client and investor protection. We're a completely independent company, albeit quite a big one. We're family owned. That's important for clients, meaning we're not sort of tied or owned by any bank or institution. We've got what's called freedom of market, so we can pretty much advise anywhere and everywhere. So look, I understand this webinar, a lot will be around the idea of moving to Spain and why moving to Spain. Essentially, I don't work for the Spanish Tourism Board, and there's areas that Richard and your overseeing home can help with, and Jack and Smart Currency can help with. But I don't think we have to go into too much detail of why moving to Spain. Again, I'm a qualified financial planner and certainly can help with other aspects. A few points to touch on important for the planning stage. Just to reiterate, I'm not a tax advisor. Again, I'm a qualified financial advisor. We'd always recommend seeking local advice, and ideally companies who specialise in cross-border aspects of the move, certainly who understand the UK and Spanish cross-border implications. I personally work with a few reputable companies on the coast, and we'll be happy to pass on any information and details around that. But things to note, essentially in Spain, the tax year is a calendar year, so it's January the 1st to December 31st. Unlike the UK, as you're probably all aware. So main point on that is understanding the 183-day rule. When and why do you become a Spanish tax resident? You know, having your fiscal address here, having your business activity, having your life in Spain, pretty much ticks that box. Now, generally, it's if you spend over 183 days in Spain. So the big sort of trigger points are, if you're planning to sell your UK property, when do you sell it, and where on the journey do you process that transaction? So let's give 2025 as an example. Jack's looking to join me in Marbella from sunny Sussex, and is planning to sell his UK house. Now, my general advice, if it's feasible or he's able to do so, would be to try and target a move of July the 1st and sell the property in this calendar year. Reasons for that is, if he sells the property next year, when he becomes a Spanish tax resident, so at that tax year, January the 1st, to become a Spanish tax resident for 2026, if the property transaction goes through in 2026, albeit he may not have any capital gains tax in the UK, he will be liable in Spain. They're going to tax you on your worldwide income and your worldwide assets. No getting away from it. So a bit of cautious sort of planning around that is important. Another big one is pensions. I think I'll touch on that later in the slides. But the beauty of a UK pension is the 25% tax-free allowance. Everyone at the age of 55 and over have accessibility to that. It's highly recommendable to take that as a UK tax resident. If you move to Spain next year, Jack's example, I don't think he's quite 55, but if he takes it in 2026, albeit it'll be tax-free in the UK, it's not tax-free in Spain. There's obviously declarations to do on an ongoing basis, and again, speak to a tax accountant, they'll assist with that. You can try it yourself, but given my experience, a bit of a minefield, so certainly pay someone a small fee. Foreign assets have to be declared on Modelo 720. Again, a tax accountant will assist you with all of that during your stay in Spain. Now, wealth management, investments. There's a big topic and a wide range of options available, but my general sort of planning advice I'm from the UK myself, I'm a British expat. I grew up in Cambridge, I went and studied in Nottingham. I left quite quickly after that and haven't really been back since. But I do specialise in the restructuring of UK assets. I'm very aware of what people have structured in the UK and why they do that. So, generally speaking, people are going to have cash savings, premium bonds, ISA accounts, pensions. Now, all of which generally are very tax favourable in the UK. They're tax efficient UK vehicles, right? You can add to ISAs with tax benefits, you can add to pensions with relief and premium bond winnings. There's no tax to pay. The list goes on, right? What we do and what we specialise in is alternative vehicles for tax efficiency. So simple terms, we would look at an ISA, simply look at an alternative vehicle that holds the same benefit. So like an ISA in the UK, there's no tax to pay in, deferral. It's very tax efficient from an income point of view. We just look at alternative, and that would be a Spanish tax compliant investment bond. Again, plenty of options in that space, lower risk, medium risk, higher risk. It's always, I can give you a broad overview here, but without going into product specifics and, it's more around individual requirements. And we always recommend having that one-on-one initial conversation to determine what your objectives are, what your income requirements are, what your risk level is, and it'll be tailor-made advice specific for the individual. But yes, Spanish compliant bonds is a great way to hold your money as an alternative to an ISA. I'll touch on pensions, but real estate as well. I'm dealing daily with market-based portfolio analysis and construction, but I'm not against bricks and mortar, and certainly we have some great partners in the property investment space, whether that's UK, Europe, Middle East. Certainly worth exploring. Again, it comes down to us having a conversation, finding out more about your situation, how you have your assets arranged, and we'll send any advice or recommendations following that. But a little bit about the capital gains tax in Spain, the rates. Again, depending on what the vehicle is and what you're liquidizing, what the transfer, what the time is, we're here to sort of provide that ongoing service and support. We're not just a wealth management company as far as a brokerage. We don't just establish a Spanish compliant bond, for example, after liquidizing a UK ISA. We provide ongoing servicing and advice. It's not just around the management of that bond, for example. It's more about situation and circumstances. If you come into inheritance, or if large expenses come in, or you move in countries, we're here to provide that support. Obviously, pensions, retirement planning is a key conversation and a key part of most clients' sort of assets. Now, there's nothing to sort of panic about. You can leave your pensions in the UK, you can leave your ISAs in the UK. The issue you'll have is Spain will tax them on an annual basis, and they sort of swell your estate. There's alternative options which make life a bit easier. That's a simple way. Now, at Holborn, within our European team, we have a pension transfer specialist team. So gone are the days of transferring your pensions into overseas pensions, like a Cure-Ups. The new UK government have put a 25% overseas tax charge on those. They're non-advisable anymore. Perhaps anyone who does advise that, I would be questioning the regulation of the regulatory advice given there. Now, generally speaking, as a rough idea, we tend to look to move those into an international SIP, whether that's UK private or occupational schemes. And all we're trying to do is get a bit more control and flexibility over the pensions, have a bit more currency flexibility, and provide you that ongoing servicing and advice. But again, it comes down to having that initial conversation without having an initial consultation. Taking a 25% tax-free pension lump sum is advisable regardless of your situation. If you're planning to move back to the UK in 5 years, why not leave it? But it's tax-free money. There's other ways to structure that fund, like a Spanish compliant bond, for example. But as I said, with the scope of advice we can give as a company, the options are endless. We can look at alternative UK property investments, UK fixed bonds, for example, short-term bonds producing really good rates of return. Again, specific to individual needs. Now, state pensions, again, still be paid. Pensions will still be paid. You simply declare those in Spain and get a tax accountant to those. Again, to reiterate, I'm not a tax advisor. I legally can't give you that advice, and we'd always recommend seeking local support there. Similar with immigration and visas and stuff. So, as I've probably touched on about 7 times now, best course of action, even in the pre-planning stage. Let's say you want to move to Spain in September or April next year. Let's have a chat. See how your assets are arranged. Obviously, I can assist with what are going to be the best practices to establish your wealth or get you set up for that move to Spain. Whether that's taking a 25% tax-free lump sum, whether that's getting a plan in place, even with your existing UK advisor, if you have one, to start liquidating ISAs in a tax-efficient manner. Obviously, markets have been quite volatile recently. It's important to have these conversations. And I'll give you an idea of how life may look in Spain from a financial planning perspective and what options essentially may be available. Obviously, if it's in a year's time, things may change, but there's also ways to establish your wealth now and get set up in an internationally portable sort of view to move to Spain. But yeah, look, it's a free consultation. We don't charge for advice. We don't charge for giving out recommendations. There's certainly no obligation or pressure to take our advice. We don't work in that fashion. We're a significantly large company with a great reputation, highly licensed, highly regulated. If we can help, if we can fit into your life and situation, then we're more than happy to do so. And it just starts with an initial consultation. We'll go into a bit of a fact-finding process, what we call it, find out how you have your assets, where they're structured, what your situation is, what your plans are, what your objectives are, and then from there, prepare and send any advice from there. So, Jack, I think it's pretty much straight over to you.
Thanks very much, Remy. I'm just going to answer this question quickly because it's relevant to the whole thing. Someone's asked, is this relevant for UK citizens only? But I'm right in saying a lot of this information is applicable to the financial planning. The requirement of financial planning is something that anyone, a third national, so a non-EU citizen, is going to need to think about. And your client base, Remy, is multinational. Is that fair?
No, very, very, very good point. As a company and within our Spanish office, we deal with clients globally. I've just had a client on the meeting from Qatar. I have clients in Japan, South Korea, the US, all over. So obviously there's quite a bit of reference here to UK, and you're a UK company. I imagine the majority of people tuning in and watching will be from the UK, but very much so. Wherever you are in the world, we can advise you and provide the ongoing support and service. Again, have an initial consultation. We can look at alternative vehicles and ways to structure it depending on where you're from and what your plans are. Yeah.
Just out of interest, are you getting a lot of American clients at the moment? Because I'm reading stuff about how that is a big part of the Spanish market now. Obviously, there's been certain shifts in the political landscape over.
You put that quite nicely, Richard. It looks like everyone wants to leave the UK and America. Yeah, the US inquiries are coming in thick and fast. We have a US specialist team who essentially is cross-border licensed to give that advice, similar to the UK. I think I did touch on this, but once you leave your country of residence, like the UK and the US, your advisor can't then continue advising you and providing you an ongoing service. So that's where we step in. British clients generally would take over those, and our US team certainly would look after US clients. But the influx of inquiries and the idea of people moving has been astronomical since November, strangely. But it's been non-stop.
Okay, thanks very much. So the answer is yeah. I mean, Holborn Assets can help pretty much any nationality who wants to move to Spain. Great. Jack, over to you. Tell us about exchange rates, why they're so important, or keep an eye on them, and currency exchange service that Smart offers.
Yeah, excellent. Well, good afternoon, everybody, and it's a privilege to be here. So thank you very much for attending, and thanks, Remy, for your presentation as well, and Richard, for your kind introduction. As you said, I'll be talking you through smart financial planning in relation to the currency markets and currency transfers today. So an introduction to the currency markets. I've put some key stats here, but just to pick a couple out for you. $7.5 trillion traded every single day, making it the largest market in the world. And this particular market moves every half a second. So keeps our currency specialists here on their toes. We're based in London, which is the centre of global currency. So yeah, some really interesting statistics there about the currency market. Now, why do currencies move? So lots of factors mainly boil down to political, economical, and geopolitical. I'm sure everyone on the call remembers the mini budget from Kwasi Kwarteng in 2022. Subsequently moved the pound against the euro around 8% within a few weeks. More recently, as we briefly just touched on there with Remy and Richard, the Trump appointment in the US has since shifted the dollar against the euro exchange rate by around 10%. And more recently than that, again, not to keep talking about him, but the introduction of Trump's tariffs in the last few weeks has been headlining the news and has caused a stir in the markets again, and it's certainly keeping people with their eyes on currency charts again. There are also more regular economic data that's published, which has also impacts the currency markets. So you look at things like inflation and interest rate decisions, GDP growth, all these factors, very hard to predict, which makes moving currencies overseas quite a challenging concept, which is why we're here to help. Here at Smart, we like to talk about something. I've gone the wrong way. Let me go that way. There we go. Here at Smart, we like to talk about the idea of the currency casino that brings to life the idea around risk and how to manage currency risk in particular. So when you're in the process of moving currencies, there's an increased risk due to market volatility. So in theory, it's like walking into a casino. There is a gamble, there's risk in play, and it's about trying to manage that risk. So exchange rates might go up, might go down, neither yourself or I have no idea which way they're going to go, which way the chips are going to land. And when buying a property or making an investment overseas, we could expect to see 10% of fluctuations in the currency market. So property costing 500,000 euros may end up costing an extra 50,000 euros if it doesn't fall your way, as an example. So this is what we mean when we're talking about currency risk. There is this gamble ongoing. Most of our clients tend to be very reluctant to gambling on exchange rates, and hence our approach is to help clients identify and remove risk from the equation. So I put two charts in here just to emphasize the recent movements that we've seen. So the pound euro on the left hand side, as you can see, 5% worth of fluctuations in the last 6 months, and pound dollar on the right hand side at around 10% worth of fluctuations in the last 6 months. So quite an opportunistic time to be speaking about currency when there are such large currency swings, and these swings always seem to find a way of recurring, so they're always keeping us quite busy. Can be very stressful though for people making offers on properties overseas or those entering into overseas investments, as the cost will continue to change as exchange rates go up and down. Going into this further, just wanted to share what a typical property purchase in Spain could look like. So as you move along the steps here, you can see on the left-hand side the research stage, and then the viewing trip stage, and then when you find your dream property and make an offer, that's when sort of currency risk becomes very real. So in this example here, I've put a few numbers and conversions on here. Offers accepted, and you've made an offer of 350,000 euros. On day one, current cost of that property in pounds is 288,000 pounds, or just over. You fast forward 3 months, in line with what a typical Spanish property journey could look like, and with exchange rates fluctuating, as we've seen in the last 6 months, this cost has increased by around 15,000 pounds, and is now over 303,000 pounds. So this is the currency risk that's in play. Remy, just linking back to what you mentioned, I know you talked about pensions as well, and moving pensions overseas. Again, exchange rates can result in causing different amount of euros to arrive in Spain if you're doing regular transfers, and therefore different amounts of euros can make it very difficult to budget. So again, risk is applied even to smaller, more regular transfers as well as larger transfers. Also touch on real estate investments. So again, just to link it to that, very similar risk to property purchase. It's crucially important to be aware of the impact of currency risk and how to help remove that as the investment gets nearer and nearer. And Spanish compliant bonds as well. So on your slide, Remy, it said you can hold those in pounds or euros. If you choose to hold these in euros, but your funds are still in pounds, then again, that will have an impact on you, and there will be a need to have a currency conversion and manage said risk between the currency conversion. So how to manage currency risk? How do we help clients do that? So we follow these steps. So step number one, understanding currency risk. So first of all, it's crucial that you understand that there is risk in play. There are factors upcoming that will alter the currency markets, as I mentioned earlier on. This will then help you make a more informed decision about how to manage any overseas payments. So that's step number one. Step number two is about agreeing your currency plan. So our currency specialists here in London will work with you to understand your appetite to risk, and put in place an agreed strategy in preparation for the day your offer is accepted or your investment choice is made. And then the fun bit. So you go away, you find your dream property, or go away and choose the investment you want to make, and then sign on a dotted line. And then it all gets very real and very exciting. So that's when you'll come back to us and execute your currency plan. So our currency specialists will then work to put in place a pre-agreed plan to give you the protection that you desire and that you've agreed with your specialist. And we want to be a service that you can use over and over. Briefly touched on pension transfers there. In fact, last year we celebrated 20 years of business at Smart Currency, which is a great milestone for us. And one of the really pleasing things about working for Smart, and something that I'm very proud of, is the fact that back in 2004, when we first began, we've still got clients this month that have used us back in 2004 with regular payment plans. So we're not just here to help with your first and initial property purchase. We want to be here for your duration and for the lifetime. And we've got different products, which I'll come on to in a few moments, about how we can help you do that. So our product set, how exactly do we help clients limit or mitigate currency risk? So I'll just take you through a few of these products that we have. So spot payments. So this is the most straightforward of our products. Very good for deposits or reservation fees, that sort of thing. So if you put down a deposit and you're going to need the funds for the deposit pretty much straight away, normally you get a couple of days by the estate agent to get the euros over there. So if I use a pound against euro as an example, deposit is due. So you agree a pound euro contract, spot contract with us, and you deliver the pounds to us today, and then we'll send the euros out today to them arrive over in Spain tomorrow. So really very straightforward. Everything happens in the space of about 24 to 48 hours. Forward contract. So this is actually a more popular contract, typically used for people who are buying property or making large investments overseas. So quite simply, this is where you fix an exchange rate today to use in the future. So we'll just go into that in a bit more detail. If, for example, you're buying a property for 300,000 euros, you can fix the exchange rate today, knowing you're going to be completing in 3 months' time. To fix the exchange rate in, you pay a 5% deposit typically today. That locks you in for your full balance, and you then pay the remaining 95% of the pounds in 3 months' time just before you go on to complete. So main benefits behind a forward, why it's so popular, gives you peace of mind. So from the day that you make your offer and use a forward contract, you know exactly how many euros it's costing you, because that's how much you've offered and drawn on the dotted line. But you also know exactly how many pounds it's going to cost you because you've locked your exchange rate in. So you've got a line drawn in the sand, and then all of these factors that are going to ongo with political events and economic events aren't going to impact how much you're going to pay for your dream property. So yeah, really important. Regular payment plans. So this automates your regular payments. So as a customer, you set up your standing order on a given day of the month. So most of our clients tend to choose the first of every month. If, for example, your pension in the UK is £1,000, you'll set up a standing order of £1,000 to us on the first of every month. So that £1,000 leaves your UK bank and lands with us every month here at Smart. We then carry out a currency transaction on the first of every month, and the equivalent of £1,000 worth of euros will then arrive in your Spanish account on the second. So it's all automated. So once you've got used to it, it'll happen every single month without fail. The only risk with this is that it is impacted by exchange rates. 1 month you might get slightly more, the next month you might get slightly less. So you can also use a forward contract to lock yourself in for up to 2 years at a time. So you can then have guarantee as to how much you're going to be getting every single month. So it's down to personal preference. We do also have an online platform, and we've got an app as well. So we do get some clients who prefer self-serving, moving money on an ad hoc basis. More than happy for you to do that as well. And the final product I'll talk about is about market orders. So market orders gives you access to gambling on exchange rates. And if I say, for example, the pound against the euro at this moment in time is that I'm going to use 120, you can target a rate of 125. So although that's not now achievable, we can't buy exchange currency for you at 125, we can place a market order for you at 125. So that means that if exchange rates climb enough to get to that 125, we can grab it for you in a split second, and it's live 24 hours a day, 5 days a week. Sounds great. You're going to get a slightly higher exchange rate, but you do take on quite a lot of risk. So if exchange rates are at 120, you have a market order at 125, and actually exchange rates drop to 115, you're then going to be exposed to a more expensive exchange rate, and you're going to have to find more pounds to buy the needed amount of euros. So that's where the risk comes in. And of course, you can blend all these options. So the idea behind having a currency specialist is to understand your risk, talk you through the product set that we have, and then find the right balance for you so that your risk is managed as and how you feel most appropriate. So each and every client is going to be different. And yeah, thank you very much. Please ask as many questions as you can in the bottom corner. And you've got mine and you've got Remy's QR code there and our email addresses and our company's website. So feel free to screenshot that, take a picture of that, or scan the QR codes. And we're more than happy to answer any questions.
Okay, thanks, Jack. Very interesting questions from the audience. A bit thin on the ground at the moment, but I wanted to ask, obviously, with cybercrime and security so important these days, well, it always is, but it's getting something that's increasingly people have to be increasingly aware of cybercrime, etc. Can you just outline how how you can reassure customers that their money is always safe with Smart Currency Exchange, and maybe just touch on the journey or the process of moving money how a client actually moves money into Smart's account, and then the journey it takes from there, and how it's safe throughout that.
Yeah, indeed. So in terms of the actual currency transfer itself, it's really quite straightforward. It's just a bank transfer. So we have got the ability to use open banking to do it, but typically what clients will do is they'll agree a contract on the phone with us. They'll go onto their banking in whichever fashion they like to do that, and add us as a beneficiary and make a bank transfer. The money will then arrive with ourselves, normally within a couple of hours, and then we then transfer the euros onto wherever it is, the nominated bank you wish for it to go to. Typically with Spain, it takes 24 hours for it to arrive, but we will send you an email to let you know that the funds have gone out so that you can track that they've got there safely. In terms of the safety and the security and safety side of things, Richard, we're fully authorised by the FCA, so we are a regulated business. We are registered with HMRC from a money laundering point of view. It's crucially important that you have those two steps when moving currency overseas. All client funds that arrive with ourselves are held in a ring-fenced account with a tier 1 bank. So that money is fully protected from our organisation. So we cannot use that money for paying bills, paying salaries, or any of that type of stuff. It is a separate client pooled account. We can only use that money as instructed to do so by our clients to move it on. I believe the percentage of default with Smart is 0.09%, which shows how strong we are as a business. But if anything did happen to Smart, that money is fully protected.
Okay, so it's as safe as using a bank, in effect, your high street bank that people might use every day. I was actually going to ask why using Smart makes more sense than a bank, but you've kind of answered that really, because all those different options you offer with forward contract spots, the fact that clients have people they can go to and discuss and make strategies for moving their currency. I mean, these are all things you wouldn't get with a bank, and you'd have to pay fees on transfers, which I know you don't charge, and also commission on transfers. Is there anything else? I mean, I think that the service thing, the one-to-one service, is a key thing, isn't it? When people are using Smart compared to a high street bank.
Yeah, absolutely. I would invite everyone to kind of have a look at our Trustpilot reviews for us and for Holborn. It will show you exactly what our clients think of us and where they find the value. But you've hit the nail on the head with a few of them, Richard. So number one, it is our service. Yeah, nearly every review you'll see will talk about our one-to-one account manager service. You don't have to explain your situation to several different people along several different stages. You have one account manager who manages everything for you. So it's really personal. You get to know your account manager, and you can have Teams calls, Zoom calls, WhatsApp calls, whatever it may be, to learn more about your account manager so they can learn about you, which is really quite unique in this day and age where everything seems to be moving to the online world. So one, the service. Two, it is a product set. With a bank, you really only get a spot contract. That's about the only thing that they'll offer you. So our product set is a much more advanced and enables you to actually control your risk in your transfers. It'd be quite scary if you were buying a property overseas and the only option you had was to do a spot contract the day before you were due to complete. Who knows what the cost is going to be if you do it like that. And number three is the general cost of a currency transfer. So banks will often charge you not only a fee for making the transfer, but there'll also be a commission involved in the actual exchange rate itself. Now, that's where we make our money. It's exactly the same way. It's just our margins are so much smaller compared to a bank, but it's a lot more cost effective, and you get much better exchange rates using currency specialists like Smart as opposed to a high street bank.
Okay. So just typical scenario, just so we can get our head around how your service can work. I'm out viewing property. I find a property I like, make an offer. The offer's accepted. Normally, I'm going to be asked to pay a reservation deposit to take the property off the market. That's when I'm going to first need to send a largest amount of euros, say if I'm in the UK, to Spain. So what would happen? I'd call my account manager in London or at Smart and say, I need to make a transfer. Can you do this for me? And what's it going to cost me? What rate am I going to get? And then you could action that within hours. And linked to that, does it make sense to pre-fund your account with Smart if you know you're going out to view property, or you're going to need money for whatever reason when you go out to Spain? Is it worth pre-funding your account so you've already paid in a certain amount of sterling or dollars wherever you're coming from, and that's ready for you to exchange and send on?
Yeah, it's down to personal preference. We do get a lot of clients that will pre-fund the account, and the reason they want to do that is that it is then a conversation. When you're in Spain, I'm in the estate agent's office, I need to pay a deposit, and we simply then just move the money over, and it's there, and you can show the estate agent the copy of the transfer there and then. So we do get some clients who know they're going to be making an offer, pre-fund the account, go over there, and then we move the money out there. We do get some clients that don't pre-fund the account, will phone us, and again, it still takes a very short amount of time. You're just relying on Wi-Fi and connection while you're over in Spain to do all the bank transfers, which this day and age is fine. So they're the main ways it works. In terms of speaking to Smart, a lot of people think that the right time to pick up the phone to Smart for the first time is when they've made an offer on a property, and that is fine. We can still help you, but where you're going to get most value from Smart is actually having a conversation a month or two before your viewing trips start. And that way you can really understand a currency plan, you can understand the risks, the exchange rates, how to budget. You then go on your viewing trip with all of this knowledge and education, a relationship with your account manager. And then when you've made the offer, you know the steps, you're familiar with the person you're speaking to, and there's that added trust there that you know what's going to happen throughout the next period of the property purchase.
Okay, thank you very much. Very interesting. Remy, got a couple of questions for you coming. I was going to ask though, just picking up from where we're off with Jack, how soon do you usually like to speak to your clients when they're moving to Spain? So you've got enough time for them to sort of start addressing any of the changes they need to make with their pensions and their investments. What's a normal sort of time scale?
If it's just an idea and you're moving in 5 years' time, there's probably not too much to talk about as of now, but within a sort of 12-month time period, certainly get the conversation started, right? We can get an understanding of assets and plans and essentially see if and where we can help at that stage. But initially now to next April, certainly worth a chat.
And especially if you're trying to time it with the different tax years as well. So I guess that's crucial, isn't it? You want to be ahead of the start of the Spanish tax year.
Again, we can't give the formal tax advice, but around the assets, we have a good understanding of what the rules and laws are around moving, and certainly there's better ways to set up yourself financially prior to the move. And it comes down to having that free consultation, see if we can help. It's no obligation. We'll ask some personal questions, don't get me wrong, but it's finding out how the assets are structured, what's in place, and what steps to take going forward.
Okay. There's a question here about capital gains tax on a UK home, actually. So answer it as best you can within your qualified capabilities. But it's Gary says, could you please explain the capital gains tax, implications in respect of selling a UK home to fund a Spanish home? So I guess there's an ideal process of doing that in timing wise.
Have you got a disclaimer that says this is not tax advice? My understanding is obviously it's broad and it's a situation. So depending if that's your main residence, again, my understanding is there'll be no capital gains tax to pay in the UK. If it's a second property, a property investment, there will be tax. Spain, again, will tax your worldwide assets. If you liquidate the property as a UK tax resident, again, my understanding is there'll be no tax to pay. If you're a Spanish tax resident, albeit there'll be no tax to pay capital gains-wise in the UK, you're still going to be liable in Spain, and they'll tax you on your income at your progressive rate, so it can be quite hefty. Again, that comes down to planning and ensuring you do it all in the right times.
Yeah, I think he's getting at what you did touch on, the selling a main residence and getting to Spain for the new tax year after you've done that, in order that you can potentially avoid capital gain.
There's nothing wrong keeping your UK house. We're not here to try and tell everyone to sell their main residence in the UK, but if it's a consideration, then you may save 25% of the value of that house in tax by selling it as a UK tax resident. If it's somewhere you're just going to use for a couple of weeks a year, again, that money you save maybe, I say you can just go and stay in a nice hotel for the next 20 years for a couple of weeks in the UK. But again, it comes down to preference. It comes down to, swelling your estate as well. There's definitely better tax if you want to pass on the house to your kids, for example. Set it up in a Spanish tax compliant vehicle that bypasses your estate and allows money to be passed on in an easy, tax efficient manner. There's all different sort of considerations to take.
Okay. The same chap's also asked, can you have a UK bank account when you're a Spanish tax resident? I think that's possible. Is it?
Well, I think the technical answer is no, but if you have one existing, it comes down to the bank, right? The bank may ask you to close your account.
Right.
Loads of different banks, loads of different options there. Some people use different people's addresses, but I wouldn't recommend that too much. You can't open a UK bank. You can't open a UK premium bond or an ISA or anything. That's the goal of it,
yeah. Okay. Can you give us an idea of sort of typical profiles of your typical clients? So are they people who are retired or coming up to retirement and they've got one or two, maybe three different private pensions that they want to pool? Are they liquidating large ISA accounts? Just give us an idea of the sort of people who are typical and who you can help the most, where their cases really do need sort of your attention to help them wrap assets or.
Well, a typical client journey, let's say moving from the UK to Spain, we obviously have that initial consultation. We discuss assets, and let's say they've got a work pension, a private pension, and a state pension. We'd recommend obviously taking the 25% tax-free lump sum as a UK resident. We then look to amalgamate the pensions into one easily manageable, most likely an international SIP, for example. And then ISAs, we begin the sort of liquidation process. Premium bonds, again, people like keeping hold of them. You'll be taxed on the winnings in Spain if you win. There's a lot of simple alternatives here, but we then structure that advice on savings and ISAs and premium bonds, and provide that ongoing service and advice. But it's all part of the planning process, right? It's not going to be a one conversation. This is all your advice and it's time to go. But depending where you are at the stage. And obviously we get them in touch with Smart Currency, buy your house, get the forward contracts in. And a good point from Jack around the regulars. We have a lot of clients who work with Smart. A lot of people have property investment income coming in, pension income into the sterling, into their bank accounts. And we always recommend using experts, especially with the large transfers and property purchases.
Yeah. These international SIPs, where are they? Are they administered by another provider, or are they administered by Holborn Assets? How are they actually managed?
Good point. Holborn Assets is an intermediary. We're a wealth management firm, Richard. We don't handle clients' money. So we're the appointed advisors for investments, pensions. An international SIP, again, I'm giving an option, but that's simply to keep the pensions within the UK. So a safe and secure jurisdiction. Assets will be custodied in the UK, but it allows a structure that can be managed anywhere in the world. If you have a UK SIP, for example, or a private pension, and you move, obviously you can't have ongoing advice and support around that. There would then be self-select investments. If you want a professional or an expert management to look after and manage it, deal with all the withdrawals, the tax efficient income, the succession, that's where we come in and support.
Okay. We have a question. This is for you, Remy, from Nicholas. He's got a property portfolio in the UK under a limited company paying income tax. So if you move to Spain, what tax is payable if he was to draw off dividends from that company for his to live in Spain? So he's taking dividends out of a UK company that owns property.
It's a great question. It's certainly a question for a tax advisor, but
it's probably not uncommon as well, actually. Yeah.
No, it depends on the region, right? Andalusia, Madrid, Catalonia, they may have different tax rules depending on what visa you're on. If you're under Beckham's law, for example, those dividends would be tax exempt. If you're under NLV, it's that progressive rate. My understanding, again, it's specific, and we can certainly point you in the right direction and ask the questions for you, but I can't formally answer those.
Okay. And there's another question here from Kevin. An EU passport holder living in the UK, am I treated any differently with tax if he's going to buy a place in Spain but live in the UK in the summer months? Well, I guess that depends if you become a tax resident in Spain or not. He also has a residence in Ireland. So not staying over 6 months, not staying more than 6 months anywhere.
A lot of people say, can I just not be a tax resident? You know, you have to be a tax resident somewhere. The basis of that question is they're a UK tax resident, not spending 6 months in Spain or Ireland. No, look, you pay tax in your main country of residence, it's the UK. Once you get over that 183-day mark, you're then liable for Spanish tax. So just something to be wary of. Wherever your main residence is, that's your tax residency. You're never going to be a tax resident in two places. The important point is there is a double tax agreement for both, right? So you're never going to get taxed twice on something.
Okay, so that's take note, Kevin. You need to be tax resident somewhere. And I guess that's where Holborn will help you. They'll be able to advise where the most beneficial place to be tax resident would be, given his circumstances.
There's not much different. That's a good one. A lot of people ask me, what's the difference between being a UK tax resident, Spanish tax resident, French tax resident? Depending on the income levels and the sort of brackets that you fall under, it's not really here or there. It's more about where you want to spend more of your time, right? If a lot of people don't like living under the radar of 183 days, it's a worry, it's a concern. Most people like to visit the UK once a quarter, for example, or once every 6 months. So it's down to preference, right? I'm not here to advise you where to spend all of your time, but as far as assets are concerned, we can help structure those and point you in the right direction, of course.
Okay, thank you, Kevin. One thing, actually, I'm surprised no one's asked this because it normally gets raised. Do you charge fees? How does it work to use Holborn's service in terms of payment?
No, good question. We're a business. We do get paid. There's generally two ways in which we're remunerated by the client. Either by client directly paying an initial fee for the advice, based on a small percentage of the initial investment amount or pension transfer, for example, and an ongoing fee. Or we're remunerated directly from the institution in which the business is placed. So there'll be no fees to the clients, the business, like a property investment, for example. If I introduce a client to one of our partners, they'll pay us an initial fee. Similar with some savings vehicles or Spanish compliant bonds even, they pay us an introductory commission. Client doesn't pay any fees.
And that's all transparent and upfront with the clients.
Yeah, so after that initial consultation, if we're at a stage where we can help and we can provide advice, we would complete a formal suitability report based on objectives, based on income requirements, based on risk tolerance, which would detail all about the client situation in details, which would explain all about the recommendation, the savings vehicle, pension, investment, whatever it is, outlining the fees. It's quite a long report, and there's always a lot of supporting documents, but we always get the chance to sort of follow up and have a meeting like this where we share our screen, run through everything. We just want clients to be completely comfortable and aware of every single aspect, and we use those meetings to run through everything step by step and make sure people have understood what they're investing into. And you know, we'd always recommend, like someone like Your Overseas Home or Smart Currency, big companies, we're quite happy for people to do as much due diligence. Jack mentioned Trustpilot. You know, there will be the odd bad review, but if you type in my name, I'm pretty sure they're all good. But as a company, we're quite confident in, you know, allowing clients to do as much due diligence as they can. And not only on myself as a qualified advisor, as the company, as well as the vehicles or instruments that I recommend with my advice.
Okay. There's a question here as well as asked about healthcare. I know it's not technically your brief, but you've lived, you say 7 years in Marbella now.
Yeah.
What is the healthcare like? Do most people have private healthcare down there, or do they do a bit of both? I know you can.
Yeah, a bit of both. Some people like the public healthcare. I'm somewhat indifferent. I think I'm quite healthy, so maybe I haven't used it too much. We have private. We had a baby 18 months ago, and the private healthcare was amazing. We had a suite in Malaga. It was different level, but you know the public healthcare is available once you become a resident. You know, it's up to you with private. It's not that expensive, but the public healthcare is okay.
Yeah, and it's not too expensive, I believe, from the actual private healthcare in Spain compared to what you might pay, for example, in America or in the UK. So makes it more accessible.
I think that's like a lot of things, Richard. Yeah, cost of living essentially, especially compared to the US or even the UK. Healthcare, private healthcare, grocery shopping, life in general. Yeah, it's a bit of an eye opener, to be honest.
So you're not leaving anytime soon, then?
No plans, no.
Good. Do we have any more questions? I think we've answered all the questions. I've got nothing else to ask. Just quickly, Jack, anyone who hasn't signed up and they really should and want to after this session, what do they do? Just tell us how they go about that.
Yeah, so the details, I don't know if they're still on the screen or not. They've got a QR code.
There's a QR code.
Yeah, they've got a QR code there for you for both us and for Holborn. You've got the company website there, smartcurrencyexchange.com. You've got my email address there as well, and that's our office number there as well. So, phone on the website, email, or on that QR code, and you'll all come through to Smart Currency and be able to register as a client.
Ask for Jack, yeah. And the other key thing is it's a no obligation account, isn't it? So people can sign up and in the event they never need the service, they don't have to use it, and there's no penalty. So
yeah, similar to Remy, it's a complimentary account. You don't have to pay for it. There's no obligation to use the account once you've opened it and had a conversation with us. As a business, we make our money when you actually do your currency exchange. So we're very transparent about that at the time that we're doing it. So yeah, please feel free to open up an account and go and find more information. And as Remy said, do your due diligence before moving any currency.
That's a link to my diary, that QR code. So if people will take a picture of that, scan that, you'll get a direct link to my diary for the next 3 months, I think. Feel free to book a call in July if you like, but whenever you like, happy to have that conversation. Or initially, it's just send me an email with a bit of an outline of your situation, any questions, happy to help.
Perfect. Thanks very much. Make use of these guys. They're here to help. As you've heard today, using them could save you a lot of money and a lot of pain. So do get in touch with them if you need to. We are out of time. So thanks very much, everyone who's watched, whether you're watching live or you're watching a recording of this. And if you think it's useful for anyone you know, or friends and family, send on the link to the recording. Thanks, Remy. Really appreciate your time. And Jack, thanks very much. If you have found this useful, anyone watching, the team here would really appreciate it if you could leave us a review on the review website Trustpilot. It will help. Otherwise, that's it from me. Thanks again to everyone. Good luck with your plans to buy and move in Spain. Thank you.